Good morning, everybody. Hope you had a great evening. We got 2 inches of snow last night, the real heavy, wet kind. Henry never stopped running last night when he got out on the golf course. He just went nuts, as he is prone to do when there's snow on the ground. The breed is built for snow, and they do like cold temperatures, so it was a good evening. We're expected to warm up, so we got about a 1/4 inch moisture out of it, and we're grateful for that. Didn't cover the entire state. The hard red winter wheat crop still needs moisture. And that's why wheat has been rallying over the last couple of 3 days. You get these real extreme blasts of cold air without snow cover. It damages the wheat crop. Okay, yesterday's action by the Fed, the announcement rallied the stock market. It brought selling into the financials. That has continued overnight. Following the Fed's action, where they said that interest rates will not be raised for at least 2 FOMC sessions. So the first interest rate increase now is for the April FOMC meeting. That's when they expect it. So we'll see if that happens. The Swiss National or Central Bank went to a negative interest rate policy. That took the European stock markets higher. The only stock market that was off overnight was China's. China is rumored or being talked about putting together a bailout support package for Russia. If this doesn't feel like the Cold War is returning with the Russian-Chinese alliance, I don't know what does, but the spoilers, the bad actors around the globe that foment problems and trouble and disruption are becoming stronger, and they are not opposed by anybody to speak of right now. If you're a dissident in the countries looking for freedom or more freedom, don't hold your breath. So that's where we stand right now. So the central bank policy around the globe for G20 is borrow to spend, print as much money as you need. All 20 central banks are in the same situation, including China's. They have to keep this loose monetary policy going. They have to borrow to spend. If they withdraw any of their support from the market, the economies weaken. If they withdraw any of their support from the markets, stock markets weaken. And the one bright spot that every central bank can talk to is, yeah, things might be bad, but look at the stock market. That means, you know, good times are just around the corner. Hang on for a little bit more. So that's where we find ourselves right now. So the stock market strength around the globe took the market, our financials lower. Now, just like we had the other night when we had that spike up, we said that the high could be in at that 128. I forget what the number was, maybe 12 area. Right now, we're having a similar pattern in WNX, where we get this one more push to the downside. So we've got a double print down here at 19.5. I think the first trade of the day is a short to retest this low right here. If it doesn't come out, then I expect light short covering. We do have news today's jobless claims. I don't think anybody pays very much attention to it. 295, kind of locked in on the same number every month. PMI services at 57.3. I think the PMI numbers are less doctored than the ISM numbers. We've got Philly Fed at 25. That would be a good number. LEI at +0.6. Nobody pays any attention to LEI because of the interest rate component being essentially zero. And then natural gas inventories at minus 61 BCF. So want to get short? Where can we do it? We're at 23 right now. Last rotate up was 26, so selling this 24, 28 will be sell 1. 31 to 03 will be sell 2. Because I think the market is headed lower, we're going to make 13 to 17 buy 1. 5 to 9 for buy 2. Okay, there are data problems, major data problems overnight. Do not do a forced tick rebuild if you kept your machine running overnight, which I did. The data will be restored tomorrow after Peter gets it from the exchanges, redoes it, but there was a data crash last night, so do not expect to get data filled in and rebuilt today. Save your data. Do not do forced tick rebuilds. Okay, looking at the 30-year. Again, we have this spike lower coming in WX like we had the other day. So this 4 to 8 area is probably reasonably good support. The knob spread came in. If you don't break it early this morning, I think it can come back and support the market. So we'll put buy 1, 1 to 5. That's where support is, and then 25 to 29. On the sell side, we've got a low at 20. We've got a low at, I believe it's 22. So this 16 to 20 area is sell 1. And then we'll make it 27.31 for sell 2. Okay, gold came back overnight. And once again, we've revisited that 10 to 12 area, and you can see we've got rejection now above 12. So 12 is probably pretty solid resistance. Last rotate up in V period was 8. Last rotate up X period was 6. And we're currently at 3. So 5 to 7, sell 1. 10 to 12, sell 2. On the buy side, we've got volume basically at 1,200, so we'll make 99 to 01, buy 1. I think we can do better than that. The 95, 97 looks like a more attractive area to me. But again, you just have every central bank in the world on the same page. Negative interest rates. For some countries, European Central Bank. Now for Switzerland. So you're faced as an investor with a lot of money. If you think about the monetization that has gone on in all sectors, there's so damn much cash that has to be thrown into the markets. I mean, it's kind of like a self-feeding engine. The more you make, the more you have to invest. Where do you put it? And the United States always ends up the least bad choice. Expect that to continue. Would you put money in Russia? Switzerland and Germany can't absorb all the equity and all the cash that's out there. So the United States is where you end up. That's why the dollar is so strong. I mean, would anybody trust anything out of Russia or China? I mean, we know the numbers are cooked. We know the books are cooked. So I'm not saying money doesn't go there, but you make sure that some of your money's in Germany, Switzerland, Britain, the U.S. where at least there is a little more transparency. You know, how much of an argument you can make these days for that, given all the games that are played. Accounting-wise, when it comes time to report the last quarter's earnings. And that's, you know, again, for us, we have a real big advantage over anybody else. We don't have to know who. We don't have to know why. We're not making commitments to the long term. We can just see that they are impacting the market, and we can join them. We trade with the big money. We execute with exchange members. And it's a pretty nice world that we live in. And think about the poor money managers that have to place money for 1 to 5 years. Where do you put your money? Okay, right here we got volume at 26. We got this low at 28 to 30. We're currently at 99. Last rotate up stopped at 20, so 15 to 25 will pick up that first band, and then our 40 to 50 will be S2. On the buy side, I think we can get stops below this low right here. So we'll make 75, 85, buy one, give it a little bit of room, and then 50 to 60 to buy two. Goldman told us in the early fall that this market was going to 120 in 2015, and it's well on its way. The European Central Bank wants the euro-dollar lower, and they will talk lower just like they'll talk their stock markets up. Okay, I don't think anybody's surprised by the Fed's action yesterday. The central bank's jawbone or act direct on the market to support stock prices. That's not going to change. That's the only bright spot, consistent bright spot, that in the automobile sector. That has fallen out from this current administration's tax and industrial policies that the Fed really has to try to clean up the mess from. So the Fed is doing the best it can with the tools that it has. What's missing are jobs. What's missing are economic job growth. You don't raise taxes and increase jobs. You don't dump on industries with hundreds of regulations, some designed to put an industry out of business and expect job growth. So Fed's got a pretty tough job. Okay, resistance is at 35. We've got 35 to 40 is going to be the first resistance band. The overnight session low was 5, basically. We rallied to 35. That's 35. That's 30 points. That's a pretty big market. So the first trade is to find a place to get long, but we've got to take out this 35, 40 area to stay with the link. So want to sell failure to take out 35 to 40. I think we can go get stops above the overnight session's high. Not sure that we can sustain and hold it. The Switzerland news is definitely supportive. And I think that probably is a little more supportive than what the Fed did yesterday. On the buy side, last rotate down stopped at 25, so 25, 27, buy one. 19 to 21, buy two. And if we take out the London low at 15, the market's probably headed lower. You know, it's where we are. You have been paid to buy into weakness, and the market snaps back. And a lot of people think that they are superb traders because of that phenomenon, where what they're enjoying is a bull market. Now, you have to give them credit for being smart enough to take the trade, so I don't take that away from them. But A lot of people that get into trading right here, especially new people, only trade from the long side. And it's been a very, very effective strategy for trading stocks. That's all I have right now. It'll take about 20 minutes to get everything up and posted. I'll see you soon.